Welcome to The Explainer. Today, we are digging into Canada's housing market. And let me tell you, it's not telling one simple story anymore. In fact, it's telling a few very, very different ones.
So, you've probably seen all those headlines, right? Canada's housing market is crashing. A national correction is here. But here's the thing. When you actually dig into the data, the real story is, well, it's a lot more complicated than that. A single national trend, that just doesn't really exist anymore.
So let's get right into it. What we're actually seeing is this massive split, this divergence. It's really a tale of three cities, Montreal, Toronto, and Vancouver. And each one is on its own completely unique and honestly, fascinating path. Yeah, one analyst really hit the nail on the head. They said some markets are, and I quote, grinding down while another is firmly in recovery. And we're not talking about a small gap here. This is a massive, fundamental split right down the middle of the country's biggest cities.
Okay, just look at the raw numbers here. They are stark. Montreal is seeing prices grow by around 7%, which is really strong. But then you look at Toronto and Vancouver, and whoa, they're both in negative territory. Prices are actually falling.
And this chart just makes it crystal clear, doesn't it? You've got Montreal's bars shooting up, while Toronto and Vancouver, they're heading in the complete opposite direction. So the big question is, what on earth is going on here? What's causing this? All right, to really get our heads around this split, we have to look past just the price tags. We need to dive into the market dynamics themselves. You know, the classic supply and demand story. How many homes are for sale versus how many people are out there trying to buy them? Now, the key metric for figuring this out is something called the sales to new listings ratio. We'll just call it the SNLR. It sounds technical, but it's actually a pretty simple idea. It just compares how many homes sold versus how many new ones came up for sale. Basically, it tells you who's in the driver's seat, the buyers or the sellers. And would you look at that? This one number pretty much explains everything we just saw with the prices. Montreal's SNLR is at 72%. That means it's firmly a seller's market. You got more buyers than homes, they're competing, and boom, prices go up. But Toronto and Vancouver, totally different story. Their markets are either balanced or even tipping in favor of buyers. That gives people way more options and a lot more power to negotiate.
Okay, so let's peel back one more layer of the onion here. Because behind all these numbers, the prices, the market heat, there's one simple, incredibly powerful word that's driving everything in Montreal: affordability. And to make this super clear, let's make it tangible. Let's say you have a budget of $350,000. What can that actually get you in each of these cities? The answer might shock you.
I mean, the difference in what your money can buy is just staggering. In Montreal, that $350,000 could get you a single-family home, a whole house. In Toronto, you might be able to get a small condo. And in Vancouver, you'd be lucky if that even covered your down payment. It's a completely different world.
So this huge affordability gap isn't just pulling in home buyers, it's also lighting a massive fire under the construction industry. It's fueling this incredible sense of confidence in Montreal's future, a kind of confidence you can literally see, with cranes all over the skyline. And you know, the most dramatic proof of this isn't even in the sales numbers. It's in the new construction data. Specifically, we're talking about something called housing starts. That's the moment a new project actually breaks ground and starts going up.
Just look at this number, a 212% increase. That's how much housing starts in Montreal jumped year over year in July 2025. 212%. I mean, that tells you everything. Builders are betting big on the future of that city.
And now compare that to Toronto. In the exact same time frame, housing starts there fell by 69%. The contrast is just, it could not be more clear. You have one city building with this historic level of confidence, while the other is slamming on the brakes, hard. So, it really looks like Montreal is just unstoppable, right? But is this boom really built to last? Because when you dig just a little bit deeper, a much more complicated picture starts to emerge, and it reveals some pretty serious challenges just over the horizon. In this quote right here, this really shows you the crack in the foundation. See, while buying a home is still relatively affordable, the rental market in Montreal is in a full-blown crisis. Rents are skyrocketing, way faster than home prices, and crucially, way faster than people's wages. For a huge chunk of the population, that affordability advantage that made the city so attractive, it's evaporating fast.
All of this is creating what you could call a perfect storm of risks. First, you've got this deepening affordability crisis.
At the same time, population growth in Quebec has actually stalled, which could cool off housing demand. And this is all happening right as a record-breaking wave of new rental units is about to hit the market, which could lead to an oversupply. And to top it all off, there's a lack of public sales data, which makes it really hard for anyone to see just how much pressure is building up under the surface.
Okay, so after all that, what's the big takeaway from this tale of three very different cities? What does this great real estate divide really tell us about where Canada's headed?
I think the most important thing to understand is this. The idea of one single Canadian housing market, it's over. It's done. The market has fractured. We are now living in an era of hyper-local real estate. Each city's fate is being written by its own unique story, driven by that delicate balance between affordability and confidence.
And that leaves us with one last really fascinating question. Are we watching the start of a major rebalancing act across the country? You know, Toronto and Vancouver are finally cooling off under the immense weight of their own affordability crises. Montreal boomed because it was the affordable alternative, but now it's creating its very own affordability problem. What we're really watching here is a real-time experiment in urban economics playing out right before our eyes. And honestly, the outcome is anyone's guess.